Hello and good morning to you on this Tuesday morning. Hopefully, wherever you are, it's nice and warm. I'm in Salt Lake City and it's not warm. And we got Connie Hill in the chat. We welcome her and we welcome to all of you here this morning. And we got Lisa, Will, High Speed, Low Drag, Road Joe, Bill R, Will, Ocean Life, Josh, and many others. Welcome to all. Now, just real quick as we get started, I will discuss actually in the coming year some of the schedule slight changes. I will mention those in just a moment here, but let's go ahead and hop right in as we talk about the Investor Master Series, where we talk about technical analysis, fundamental analysis, options, all of it, okay? The only thing that we won't really touch in this class is like futures, which they discuss Thursday morning, and potentially currencies as well. We'll leave those two topics off, but everything else, fair game, okay? And I would also say that if you want to know more about ETFs, we'll leave those off as well. Connie discusses those on Monday afternoon, and Kevin and I, we bicker about it on Friday mornings. Join Connie or Kevin and myself. Connie on Monday afternoon, Kevin and I on Friday morning. Now, just remember, as we talk about stocks, but also options, remember that options carry a high level of risk, not suitable for all investors. Remember that the information here is provided for general informational purposes only. This webcast discusses technical analysis, but there's other approaches like fundamental analysis, macro analysis, intermarket analysis, right, that can give some different views, okay? So technical analysis is not the only way to look at the markets. And also remember, when we talk about examples, we will use the Paper Money software application. I'm going to ask you in just a moment kind of about the two accounts and what you would like to reset those to. Let's just kind of make sure we're all on the same page there. Remember that investing involves risk, including loss of principal. Okay, so hard to have reward if there's no risk. Those go together. And also remember when we talk about examples of short options, those can be assigned at any time up to expiration, regardless of the in-the-money amount. And that's what American options are. These are not, the examples we show are not European options where it's at expiration only, okay? Now, I want to talk about just real quick, just briefly, let's kind of go ahead and hit something real quick. So first off, this page right here, okay? And you're going to see that the page that I sent you right here is where we go to the schwab.com/coaching webcast. And you're going to now see that this is the schedule, and you're familiar with this. We're not going to look at the December. I want to go into January, show one quick thing on December real quick. So first off, you're going to see that on December 25th, Christmas, markets closed. We're not going to have education on that day. We could, okay? We want you with your families and friends, okay? And your pets. Don't forget the pets, okay? They want a present too. Now, also, you're going to see on the 26th and 27th, we will not be teaching on those days. We will not be teaching on the 30th, 31st, and January 1st. So this week right here is pretty much family time. Now, on some of those days, like the 26th, 27th, 30th, and 31st, markets will be open. Stay tuned for kind of market holidays or market hours. Stay tuned for that. We will kick back up on January 2nd, okay? Now, speaking of that, speaking of January 2025, you're going to see that if I open these just real quick, you're going to see that we have some new topics. So you're going to see that we have on Tuesday, swing trading. Okay, that's a new topic. We also, for example, Mr. Michael Fairborn will teach that. We also have, for example, if you go to trading price patterns, Barbara Armstrong will be teaching that, okay, at 1 p.m., and this is based on Eastern time zone. Trading index options, also a new topic as well. And you're going to also see we have another new topic called after hours trading as well, taught by Barbara. And you're also going to see that on Friday at 4 p.m., market movers, Mr. Ben Watson teaching that. Okay, so those are kind of some of the new classes that are coming out. And these were some of the topics that were requested. And so we've adjusted the schedule to reflect kind of some interest from you guys and gals and put those in the schedule. As far as what I teach, okay, trading technical indicators, Investor Master Series, growth and value, trading the trend, and also Trader Talk right there. My schedule will not change. Same time, same station. So it's pretty easy. But stay tuned for those kind of different classes coming up as well. Now, quick reminder, speaking of next year, I want to go back to just real quick the paper money accounts. Okay, so you guys and gals know that November 15th of last year, we started these accounts. I for some reason, I kind of spaced it. Maybe. Can anyone actually tell us what this account started at? We start two accounts. Margin. Now, I wrote down a number, and I'll tell you if we're thinking the same number, okay? The margin account is, we started November 15th last year. And what was that account balance restarted at? Okay. Now, also in the, we'll go to the IRA. What was that account balance started at? Now, the reason why I asked this question is I now also want to ask, what do you want the numbers to be? I also wrote down kind of what I thought the numbers could be as we reset those on January 2nd. Okay. So margin account, that's what I thought it was. Okay. So thank you for that, Mark. So we started at 45,000. I'm not quoting percentage returns. I'm not even doing that. I would like, and tell me what your thoughts are, I would like that account to not be 45,000 to restart at 45. I like that number on the margin to be like 35,000. Are you okay with that? So, and actually, let me restate that. We're going to, I think I said 35,000. I want to even go lower, 30,000. If I said 30,000, 30,000. Okay. So the margin count, I want to push down to 30,000, not reset at 45. On the, also the IRA, I don't want to, for example, like restart at 185. I want to go lower than that. I want to go like, maybe like 105,000. Okay. Something where someone could say, hey, you know, maybe they're kind of like mid 30s. Okay. Maybe they're late 20s. Maybe they're lagging behind in their investing and so on. So I'm kind of thinking in my mind, tell me what you think. Okay. It's a team effort here. I'm thinking like 30,000 on the margin. We'll restart January 2nd. And then also second, the IRA. We had 185 last year, November 15th, but let's push it down to like 105,000. Okay. So lower. Okay. Flat said 30. New me says 30. Okay, fine. So let's just kind of say 30 on the margin. We'll reset together on January 2nd of 2025, flush everything out. And I'll show you how you can do that. And then on the IRA, R. William Belanger says 5 million. I like your thinking. Okay. It'd be nice if we had a third trading account. But let's say we pick, let's say 105, or Austin says 75. Now, the question, Gary says, will you be using the margin? The answer is no. We're only using the cash that's in the margin account. Now, if we had a balance of 30,000, you know, we kind of have to be, well, semi-picky on what we're doing to kind of do that. So I'm trying to kind of have account balances low enough where, you know, what we pick and how we trade becomes really important. And also managing against large losses, which I think when someone's first getting started, that is a paramount topic. All right, so let's kind of say we start with 30,000 in the margin on January 2nd and 105 in the IRA. If we had a third account, and let me see if I can't get one, if we had even a bigger account, and that'd be interesting as well for those of you that have bigger accounts, okay? There's nothing wrong with that. That's where we're all going. Now, what I want to do over time, of course. Now, what I want to do is I want to kind of talk about markets. And so today, I think the focus of what I want to talk about is really defense and position management. Now, I'm telling you, it's fun to put on positions. It really is. But that's only half of it. The other half is kind of monitoring market conditions and then monitoring your positions because those positions are correlated to the markets. So for example, given, if we take a look at this, if I look to the SPX, tell me what you see on the SPX here today. What do you see? What do you notice? Now again, the question I always kind of think to myself is, where are we? Where's the price in relationship to the moving averages? Okay, that's always a question in my mind. Well, if the price is below one moving average, the 10, we're losing momentum. If we're below the 20-period moving average, which we are, we're kind of losing some of that trend. So the S&P kind of looks like it's a little under pressure. Some of that easy upside momentum, and my gosh, lately it just seems so easy, okay? It was just going up, 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 back, 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 gone. Okay, that's what it felt like. And you're going to see that yesterday kind of fell down, and we had a negative crossover. Now, I'm going to tell you what happens as the market goes up, 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 up. Usually people feel really smart and, man, my gosh, if this goes up like this another 2 weeks, you know, This is wonderful. But the thing is, when you feel usually the most confident, that's usually when you should be watching your positions the most. It's important. Remember what I just said. Okay. Now, when you pull up, for example, the monitor tab, the one thing that you'll kind of notice is if you get the indexes, okay, let's say the S&P to start with, we might start seeing trend 4. We'll probably most likely see trend 5, and you sure hope that you do not see a bunch of trends 1s yet. So if the S&P goes below the 10-period moving average, trend 5, what is trend 5? Trend 5 is when the price falls down below the 10-day moving average. Significance, you're losing momentum. You're losing those unrealized gains, okay? And what you're now going to see on the chart, 5, 5, 5, 5, 1, boo, 5, right? You're seeing a whole bunch of these now. So if I just look at the S&P and that's the only chart you gave me, I would probably be saying we're going to be doing more defense than offense. Now, someone might say, well, defense isn't as fun. What do you really mean by defense? Stop adjustments, reviewing targets, reviewing reward risk management, okay? Now, if someone said, well, I like putting on positions more than actually exiting positions. Well, exiting, okay, is where you're trying to harvest anything that might be there. This is a critical portion. You want to be as good with exiting as you are with entering. You don't want to be like a 9 out of 10 on entering and a 3 out of 10 on exits. That probably doesn't work very well. You're giving a lot back. So in our discussion here today, we'll talk about some of the positions that we're going to manage, stock and option positions. Now, if we go to just real quick the NDX, just briefly, what do you notice on the SPX? Well, kind of close below the previous day there. We kind of see a little price rally with an upper shadow. Let's call this the Lisa Jack upper shadow. She hates these, right, Lisa? Okay. Now, if you see that upper shadow, it's where the price rallied up to, couldn't close there, not trading there right now. And if we close near the lows, kind of more signs that we're losing momentum. Don't say you didn't see it, because I pointed it out 3 times already. So if we're below that 10-period moving average, which we are, we're losing momentum. And if you lose momentum, you fall down. If this is the 10, if you fall down below the 10, you fall down to the 20. The 20 period can't hold. You tend to fall down to where the horizontal areas are. And that typically means you say, James, I was doing so good until. And when does it change? Easy answer. When the price falls down below the 10. Some of you do not get that yet, but I'm going to get you, okay? I'm going to get you where I can get it in your mind and you say, geez, when I'm doing really well, prices are above the 10. When I actually tend to be giving a lot back and I lose my confidence, it was when prices are below the 10, okay? You need to write that out and put it in front of your computer. You think I'm kidding. I'm not, okay? Now, when you look at the Russell, it hasn't even been close. We fell below the 10-day moving average right on the 27th. We haven't been the same since the 27th. It's just been one day up, sell, sell. One day up, sell some more. One day up, sell some more. Okay, and it's trying to get a little bounce back. But you go back to when this pivoted, it really started with the upper shadow, the Lisa Jack upper shadow, and you're going to see another upper shadow and another upper shadow, and that's kind of some points on the chart where you can start to see some exhaustion, right? And the time that we actually fell down and closed below 10-period moving average, we have never closed back above that, and the trend is starting to give it back. That's the pivot, okay? Now, if we go last one, just Dow Jones Industrial, you're going to see that when you look at the Dow Jones, pretty sloppy as well. So when we look at all the indices, if we kind of said, what are we probably going to be doing more of, buying stuff or selling stuff or protection, we're probably going to be saying more protection. Now, briefly, just real quick, some of the things that stood out, and I know you know this, okay? Gold, we talked about this yesterday. Gold, silver, and copper started to firm up at some support levels yesterday. Gold getting a little bounce here. Did you see that? Okay. Keep an eye on silver as well. Keep an eye on Mr. Copper. Now, we also, when we take a look at, let's say, the sectors, they've also been a little, well, sloppy, okay? Discretionaries kind of overshot yesterday, kind of pulled back. trying to make a higher low. Discretionary is still holding better. Where we kind of got when we got, for example, some further selling pressure, financial still pulling back, okay? When we also look at technology, also pulling back. So kind of see that same theme when we pull up the S&P 500. It probably gave us the idea of what we were going to be seeing on the chart. When you look at communications, $ IXY, fell down pretty aggressively below the 10 and the 20, trying to fight back here, but got a little volatile. So whenever you see these large red candles at the end of these big booming upward trends, somebody was cashing in, okay? And they were smashing down the price as they were trying to sell as much as they could, okay? Now you're going to see that when you look at energy, holy red lines to say the least. And when you look at, let's say, utilities, still leaking, okay? Not a whole lot there. Look at the red shading and the red lines, okay? Just ugly. When you look at industrials, that hasn't looked very strong either. And you look at basic materials, okay, IXB, you're going to kind of see that not so much. So 3 out of 4 indexes are kind of under pressure. When you look at the sectors, you're really kind of saying the market breadth, okay, the width of kind of what we're seeing moving to the upside, there's a lot of cracks. Any questions on that? Now, if we see that, we haven't looked at any position yet, we're kind of now a little concerned about, geez, well, what's in this portfolio, okay? And are we just sitting here talking about something when we should be monitoring the portfolio? Okay, now I'm going to go back to just real quick. Let's go back to, I want to bring up first off, let's go to the margin account for just a moment. I want to talk about these shares. Now, in our examples, we're going to be doing new positions. I talked about new positions yesterday, only if they kind of had lower RSI readings. Only if they were well, 2 we talked about had relative strength. But we tried to focus on examples yesterday that had some lower RSI readings. Now, what I want to do is I want to pull up 2 stock examples. The purpose of this discussion is I want to talk about stops, okay? And I want to talk about stops on Amazon, and I want to talk about T-Mobile. Now, when we talk about, for example, stops, we like to kind of go back to really using like a 5-day low, okay, and a 10-day low as an example. Now, I'm going to kind of show you this. The lines that are on this chart, okay, that line is a 5-day low, and you can see that right up here when I point to it, okay? Seeing the red, right? Seeing the yellow, okay? Look in the top right, 5-day low. Now, the problem is the 5-day low is at 215. So if these stocks go up quite aggressively, you're thinking, well, yeah, I'll just move up my stop. But then when you think through that and say, do you realize the stop is $15 lower than yesterday's high? And when you look at the 10-day low, it's $30 lower, okay, than yesterday's high. Now, I don't always show this, but if you get a stock where the deviation is that much separation, you might say, James, what I'm going to go ahead and do, and I'm going to make this statement provided we do not have a target, I'm going to even choke that stop even closer. I'm going to use today's intraday low, okay? These intraday lows are like 225. And what we're going to do is we're going to take the intraday lows over about the last 2 days, and what we're going to do is we're going to take 225 less 1%. Now, wait, why are you doing 1%? Well, because our purpose is we're trying to get stomped out, okay? We're trying to exit and profit take. Now, if we look at this, 223.19, okay? 223.19. Now, why are you kind of overshooting the stop? Why not set it down here? I think you know why. You give all the gains back. Why are you setting the stop here? You'd probably give almost all the gains back. Let me kind of make a comment. If the investor cannot make gains of in a trend of this magnitude, I question when would they ever make anything? When can you have a stock go up 30, 40 points and the investor says, I walked away with nothing? That's not a market problem. That's an investor trader problem. Okay. So when we see these type of moves, we're going to kind of more aggressively adjust the stops. Now, I also want to go back to see when do we get in 223.19, and we're going to move the stop to there. Oh, this is a guarantee. Oh, that's not fun. That's funny. Okay, stop is a trigger to sell. It's a market order. We have no guarantee the execution price will be equal to or near the activation price. Okay, so it's just a trigger to sell. We can't say that we locked in gains. This is not a long put with a right to sell. This is a trigger to sell. We need to see where it fills. Where was the entry placed? Okay, it's placed on the 5th, right at 198. So if we go back to the 5th and say, where was that entry? That entry, if you take a look at this, was right there. And right there was here, okay? So that's where it was. And if we kind of went back and said, why there? Well, this was pretty much kind of going back to the old breakout, right? So I'm going to put an X on where we got in. It was right there. It was on the bounce of the breakout. Gaps up, pulls back the first day. Now, if we kind of had to give ourselves a grade and said, how good was the entry? We'd probably say B plus, A minus, not bad. The first day on the bounce. Maybe you'd have to say an A minus, not bad, okay? Now, what I'm going to do is we kind of adjust the stop like that. Now, let me kind of tell you where everything has not been rosy. T-Mobile, again, we kind of look at this and say, what do we have? Why is the stop down here? Well, this is when you kind of just, become undisciplined, and the stop should have been, if we're using a 5 or 10-day low, the stop should have been like there at 241. I forgot, okay? And the investor says, well, James, what do I do now? So here's the kind of the problem. If we had just raised up the stop, that stop would have been at 242 and change, and it maybe could have missed a large chunk of the waterfall. Now, here's the bad part. We had a lot more gains than $127, but now what is the question I want to ask you is, what does a lack of discipline cost you? See, you think if you didn't make anything, it didn't cost you anything. But I actually tell you that if you're undisciplined, you miss opportunities, and there is a cost to that. Now, on the other side, if you took the advantage and you said, I got in, but then I forgot to be disciplined to move the stops, well, now if you had $127, if we're literally now at like 233, maybe could have been stomped out $8 higher on 30 shares, should have had another $240 right here, okay? So not being disciplined maybe costed this portfolio maybe about $240, okay? Now, what we're going to do is if we realize that we should have been out already, we're just going to admit we're wrong. Should have been out. We should have had that stop up here. It wasn't. And we realize we messed up. We don't keep driving down the road to see what happens. We're going to turn around and admit that we're wrong, which is hard to do, okay? In German, the word is Umkehr, which literally means you're going to stop and turn around. Kehrt turn around, okay? Now, the biggest thing is we're going to sell that stock, no, not a commission, and we're going to send the order. Now, it is so sad that gain should have been about $240 more, but this is a very, very good reminder. Do not fall in love with the profits because they're unrealized profits until you sell them, and then you can count it, gain or loss. Now, what I also want to do is I want to go down to just real quick this position. And this position right here is on, just real quick, Apple. And I want to go back, and we've practiced these a number of times, okay? And I want to just kind of take a look. Now, when do we get in this position? We got in on the 27th. So about 2 weeks ago, we got in an Apple position. Let's kind of take a look at where that position was, grade our entry. Where was the 27th? Okay, the 27th was right there. Now, we might kind of say, well, James, that was so aggressive. Yeah, it might have been. But if you actually thought that that might, let's say, break to the upside, well, you kind of bought right at resistance thinking that it could shoot to the upside. Now, it did, and you're going to see that these green candles, okay, and that green shading, just beautiful, okay? Now, our position is what? Well, it's long shares, short the call, that's a cover call, and you got the long put. Now, remember, when the stock goes to the upside, the put value is going to go closer and closer to zero because there's a lesser chance of the stock being below that strike price. This is the put. However, when the stock goes to the upside, the call increases in value. So if you look at this position, if the stock shoots to the upside, the position really becomes like a covered call. It's the obligation to sell those shares at 240. Now, what we want to assess is this gain right here. Do we have where we can maybe potentially profit take? Let's run these numbers just briefly and kind of see if there's something we should manage. Now, remember, when I said defense was stop adjustments on stocks, okay, or options. It was reviewing your targets. Maybe you just want to manually sell. 3, it was looking at your reward to risk. That's exactly what we're doing here, okay? So what was the stock price entry, okay? 234.80. Now, by the way, I've had people historically say, well, this seems like work. And I think in my mind, like, well, what do you do for work? Like, if this is work, like, we're not digging a ditch, okay? Later this afternoon, I'm going to help my son move out of his place and move somewhere else. That's going to be work, carrying a fridge on your back and a washer and dryer. This is a lot easier than that. Okay. Now, short call. What was the short call? The 240. Let's type it in. Okay. And I'll be honest, for me, this is the fun part. Okay. Long put, I'm going to not smile because I don't want to let you know that it's the fun part. Now, here's the deal. Well, credit or debit. Well, you got 222 to sell that call, paid the 205. There was a credit there of 17 cents. All right. Now, what we want to kind of know is what was the maximum that we can make? $520. Okay. Now, it's $5.20, but you got to remember we got 100 shares. So it'd be $520. We want to kind of say, well, what is the current PL? Okay. It's the current PL right now. What is it? And we're going to look at it per share. Well, the current PL is 425. So I'll type that in, 425. So this is the most we can make if we go the next 10 days. But we have 425 now. Where do you see that? It's right here. Okay. So we're at 79% of the maximum gain. And that's even with a little sell-off. This morning was even higher than that. So what could we do? So remember, on defense, we're saying, look, if we've squeezed as much of that reward as we can, the last 20% of that maximum gain, let me kind of type this in, the remaining reward. What's the remaining reward? Well, that remaining reward is just the difference between, okay, the maximum, okay, and actually I want to take that back. It's 537, okay, less the 425. So the most we can make is $1.12, okay? So when you kind of look at this, if you kind of think about this, what do you have left to make? $1.12, and what's in the potential hand right now, we haven't got filled, is $4.25. So when you kind of look at that ratio, it's like a 1-to-4 reward risk ratio. Now you should say James has talked about that. And that's so true. Okay. When you get to where you have like $1 left and you got 425, that's like a 1-to-4 reward risk ratio, or almost. And that's when the investor might say, you know what? I am going to go in, and how do we do that? Let's click on the shift key, hold it down, right click, create closing order. We're going to buy it back. Now, I like to get out of the options first. Make sure that those get filled. Hold the shift key down and click on both of those options. Click. Now what we're going to do is we're going to hold it. We're going to do it the mid price. This will have a commission because these are options. We're going to go to confirm and send. And if we read cost of the trade, including commissions, See that right there? If that's okay, we're going to send the order. Now, if that then fills, where are the gains? The gains are on the shares. Now, remember, I don't want this to go too far before we actually see if we, I only let it go 2-3 minutes, and sometimes adjusting it, pennies can make the difference. So that way we can kind of see this at the same time, and it's about a penny, okay? I'm going to see if that fills, and if that does, I'm going to right-click on those shares, create closing order, and just sell the shares of the stock. Now, I don't want to sell the shares of the stock already, because if I sell the shares of the stock and I have a short call out there, it makes that 240 call a naked call, okay? Don't want to go there, okay? And it means that we have an obligation. By the way, that mid-price movement on us, okay? And I'm going to go to, for example, I'm going to try to get filled. And this is why sometimes I try to send the order through quickly to see if we can get filled. And it's because the price, now, by the way, overall, this is not going to hurt the overall position. The stock has gone up. And if the stock has gone up, our delta is still positive, so we could benefit. Now, for some reason on the paper money account, it's not filling. There it finally goes. And now it only leaves us with the shares. So how do you sell the shares? Pretty simple. Right click, create closing order, sell. And now what you're going to see is we're going to come in, move it to the mid price. We don't know if it can get filled there. We're going to try, confirm send, not a commission, cost of trade including commissions, 0, send. Now let's kind of see if it can fill. Now, our price was 83. Okay, the price was 82. Let me go back in and say, where was that? Yeah, I'm going to move it down about 2 pennies, see if I can't get filled. Okay, that's what I'm saying. If you got something pretty active, okay, we want 80 and the ask is 245.76. Now, by the way, this is probably what's going to happen is if we're trading in the morning or 90 minutes in the afternoon, this is pretty normal that they move like just nickels, okay? And I'm going to unlock this, send it, and we should be pretty close, okay? There it goes. Now, okay, so notice on that, now we can look and kind of see, well, what was the gains on that? But that trade right there was about $425-ish. It was a bullish trade, defined risk, okay? Now, what I want to do is I want to kind of go back to any other questions that you might have, okay? Now, one of your questions you might be thinking is, could we show like a new one of these, or could we kind of show one where the stock has gone down? Well, let's kind of go just take a quick peek. So first off, a couple stocks that I noticed this morning that was kind of getting a little push here, okay? Boeing, for example, we talked about. Now, I'm going to kind of show this one as far as a new example. Now, remember, we did an example trade on Boeing. We've talked about Boeing, I think, last Thursday, and we talked about it yesterday. We kind of talked about maybe how Boeing kind of had an inverse head and shoulders pattern. The trade on Boeing, let's pull it up, was what? Well, we did a short put vertical. Now, here's the thing. When you watch my classes, I don't just talk about charts. I trade those charts, okay? We're going to put multiple trades in. You do not learn by PowerPoints, even though they're helpful to a point, or me teaching, Connie teaching. You learn by application, okay? So I ask that as we do trades in your paper money account, follow along, put them in your paper money account. They're not recommendations, but that way you can learn, okay? Now, when we put this on? We put this on just yesterday. Now, wonder if the investors said, look, I want to kind of do something more directional. Now, by the way, I'm going to come in here and I'm going to buy the shares of stock, okay? Let's go to the trade tab. Now, remember, if you do this type of trade, you are thinking that the stock trend is going to continue to the upside. And no kidding. I mean, who would buy shares of stock if they didn't think the stock has somewhat of an upward bias? Because if they didn't understand that, they might be saying, well, I'm going to do it for dividend, but still you probably want the stock to go somewhat up because you're outlaying the capital, okay? So if we buy, let's say, the stock 100 shares, step two, we're going to go down 20 to 50 days to expiration, start in the monthly options. And what we're going to do is going to go to a delta 30 to 40. Can anybody tell me why we're going to do delta 30 to 40? Why? Well, because we're trying to sell a call higher than what we bought the stock for. Not an unbelievable answer, but that's all it is. We buy the stock at 165. We want there to be some upside on the stock. Okay? That's it. Now, we're going to take the call premium and we're going to come over here to the put side and we're going to try to buy a put to the downside with a delta 30 to 40. If most of the time, not all the time, if you sell a call, delta 30, 40, buy a put, delta 30, 40, a lot of the times you're going to see the two strikes out of the money. Okay? Now, if we collect, let's say 410-ish, and we come over here and we actually pay 475-ish, we're going to have a credit or a debit. Well, we're going to have a debit. Okay? Now, what I'm going to do here is I'm going to go down to single order. I'm going to do it again. Okay? First trigger is SEQ. Now, we haven't lost on this strategy yet. But we could have some losers, okay? But there's been a hot market here lately, okay? So it's understandable to think that the bullish trades probably did pretty well, which they have so far. Now, let's kind of see if one doesn't work, okay? We're going to sell the 175, and I'm going to look at the 175, and I'm going to put that right about 405, okay? Now, that's the call. We're now going to come over here to the put side. Now, the 160. Now, if I do this right there, what you're now going to notice is that is going to give us about 485, and it's a debit there of 85 cents. Now, wait. Do I have to do the 160? Wonder if I kind of want to make this position more bullish. What could I do? What could you do? Oh, simple. Don't buy the 165. Buy the 160. If you buy a put farther out of the money, the delta on the position will be overall bigger. Delta on the the 160 is 36. Delta on the 155 is 26, okay? So what you're going to notice is if we buy the 155 instead, overall delta on the caller is going to be 10 delta higher per 100 shares. So if the investor said, James, I want to get in for like a credit, and I think there's more of an upside bias on the stock, well, let's go down and do that one, okay? Well, if we did 320, let's go 315. Do we get a credit or debit? Well, if we kind of push the put down lower, if you thought there's a greater chance for the stock to go up than the stock to go down, you might be okay with having a lower strike put. Let's run the numbers, okay? What's the stock price? 165.44. By the way, this doesn't have to be on an Excel sheet of paper. You can do this literally on a sheet of paper. What's the credit? Well, if my math is right, it's about 90 cents. So from 165 up to 175, 956. Now, by the way, I love it when it kind of gets old like this, where it kind of gets like, dude, I'm starting to nail this stuff, okay? So 165 to 175, 956. Credit or debit? Credit. Why is it a credit? It's because we pushed the put down, okay? Now, what's the maximum gain that the investor can make per 100 shares? 1046. That's per share. If you had 100 shares, 1,046. Now, if we look at the put, what's the put strike? 155, okay? Now, if the stock goes from there to there, the stock loss is 1044, and the credit offsets that a little bit. The max loss is really 954. Now, hold on. What would happen if you kind of change this back to 160? Just briefly, if you did that. I think the debit there would have been 90 cents negative. If we said, hey, I am going to do the 175 and I am going to do the 160, this is what the numbers look like for that. 866 maximum gain pre-commission, 634 loss. So notice on the caller, it sweetens the reward a little bit. Why? Oh, it's simple. Because you have the shares, okay? So let me kind of go back on that. If you said, James, I'm going to do the 155, there you go. Confirm send, buying the shares of the stock, okay? Selling the call, buying the put, the commissions, right there, reading what it says, the commissions are on the options, okay? And we're going to send that order. Now, when we look at the position, there's the shares. Now, how many of you are a little surprised on that kind of discussion of us buying the shares of Boeing? That's very awkward. But what I want to kind of point you back to is when you look at Boeing, Boeing had the example where it broke down, and a day later, someone's buying below the moving averages. How many times have we talked about that? If investors are buying below support, they obviously think they have enough ammunition of capital to knock the price higher. Doink. Okay. Gaps to the upside and shooting. Now, here's the deal. The reason why we kind of talked about these type of stocks that have lower RSIs is these also stocks, probably stocks that have lower correlation to what the market has done. If I say lower correlation to what the market has done, we're probably also saying stocks that might have a lower beta. Okay, so lower beta, lower RSI. We could also say with this, maybe the recent correlation to the S&P has not been that strong. So if I pulled up the S&P chart, it would show up here. If I pulled up like this chart, it's down here. So what sometimes investors do is they'll sell their gains and they'll come back and try to buy some stocks that are freshly breaking out. They haven't had the big run yet. So that's the third position we've done on Boeing in the last 3 days. So question was, when did the paper money account buy shares of Boeing? Well, so Dean, and by the way, my dad's name is Dean, so you're a good man, okay? So when did the paper money account buy the shares of Boeing? Answer, about a minute ago, 2 minutes ago, okay? So there it is right there. The bottom, the 10th, the 10th, and the 10th, that's the caller that we just did. These trades were from yesterday in the trading with technical indicators class. Those were trades from yesterday, okay? Now, what I want to do is we're going to wrap this up. Keep an eye on a couple of these other stocks. Example given, we've had O'Reilly, brand new high, okay, here today. Its twin cousin, okay, family. AutoZone also getting a pretty big push. Now, this is not kind of surprising. We've kind of seen consumers price conscious, really about kind of how much they're spending. That many of these new cars might have some potential issues, and they're trying to kind of make their old cars, which are probably still good cars, just run longer, okay? Trying to kind of protect their expenses, okay, and protect their net incomes, savings. Now, the biggest also thing that we talked about yesterday was Google, okay? Now, Google, in one day, this was not planned, I'm sorry, but sometimes maybe it just goes up, okay? Sold the put on Google yesterday, 430. It's at 255. 40%. Now, when I looked at this morning, I think the highest it got was 57%. Okay, so the option was sold for 430. And if we said, could we go back and take a look and see what was the low? Sure. Right click on that bit of that option. We're going to go to more info, and we're going to put that right in the trading grid itself. Now, when I pull this up, it's going to plot just how low did that price get. It went to $1.75. What was it sold for? Okay. Well, if that was sold for, okay, 430, if we went from 430 down to $1.75, we were up $255 of the 430. So I said 57% was the highest I saw it. It was actually 59% in less than a day. That's not always normal, okay, of course. But there could have been some opportunities to play defense. And we talked about if you can get 50% in the first 10 days, that might be a reason to take some profits. And you're going to see that that was 50%, 59% in about 10 hours, okay, of trading. That's abnormal, but sometimes, hey, maybe you just hit it right. Now, I want to give you a homework assignment, okay? You need to go out and check your own stop adjustments, okay? You are the CFO of your own financial future. You are the chief investment officer of your household, okay? If you don't look at it, who's going to look at it? It's your money, okay? That's not putting the positions on, it's managing the positions. I also need you to also evaluate the targets. That also might evaluate to say, should I maybe sell some of these stocks, protect them into the resistance areas? What are you going to do if they start coming closer to the targets? Okay, so stop adjustments, big. I also need you to review your reward risk on your positions. Okay, our new example that we did here is we went back to Boeing and we added to that position. Keep an eye on O'Reilly's and AutoZone. Okay, I'm out of my time here today. Our focus is really on defense. It's not about just saying we were doing good. It's how do we start locking in some of these potential gains and taking some positions down when they don't really have a whole lot left and making that decision. So if you were to ask me, why do some people struggle with exits? They don't like to make decisions. Today was practicing in making decisions, okay? And then going through with execution of doing those trades. Now, stay tuned for Barbara Armstrong coming up next. If you have not subscribed to the Trader Talks channel on YouTube, do so. It's free to subscribe. And also remember that if you do not have the playlist for this class, you're going to see that playlist is right there. That way you can see all of our prior classes right at your fingertips. Simplest thing to do. Just go to YouTube, type in Trader Talks, and what you're going to see is right in the middle of the page. If you have not done so already, it'll just say subscribe. That way you can get access to all of our content, most of it, okay, right on YouTube. Do it, okay? And also I want to say thanks to Connie for answering those questions in chat. Feel free to also follow Connie and myself on X as we post there throughout the day and the week. Thank you so much for your comments and participation. Our focus here today has been defense, okay? And managing the capital and the positions. So with that said, stay tuned for Barbara coming up next. Take care. Bye-bye.